Is Bitcoin gearing up to shatter its all time high? Or are we on the verge of a significant pullback? With BTC teetering just below pivotal resistance at the 69,000 area, crypto traders are filled with anticipation. A Bitcoin breakout into uncharted blue sky territory could signal huge potential upside, while any hesitation could lead to a strategic pullback or potential consolidation phase. Today, we're analyzing BTC's possible paths to equip you for success, regardless of Bitcoin's next move. This video is not about guessing or predicting Bitcoin's next move. It's about preparing you with a valid strategy for every possible market outcome, be it a surge to new record highs, a short-term pullback, or sideways consolidation. Also, stay tuned till the end of this video for our exclusive insight on recent news that could impact the altcoin market in a big way. You definitely don't want to miss this news, as it may create a shift in altcoin market dynamics in the coming days. Always ready to act by liking, subscribing, and turning on notifications for the latest actionable insights. I'm Deron Wagner, founder of Morpheus Trading Group. With over 20 years of trading experience, I'm here to navigate you through this pivotal market moment based on what we see, not what we think. So, let's see what the charts say. When analyzing charts as a swing trader, it's crucial to utilize what we call multiple time frame analysis. That means we look at the same chart on multiple time frames, both short and longer term time frames, and we look for patterns and trends. The more of the trends and patterns that align with one another on multiple time frames, the better. So in this regard, let's go ahead and do a top-down analysis where we look at the longer term chart first, and then we zoom into the shorter term chart and look at potential scenarios for Bitcoin, as we mentioned in our intro. So taking a look at the weekly chart here of Bitcoin, we can see that Bitcoin is currently testing its all-time high, which was set back in 2021. You can see that in late 2020, we had a massive rally that caused Bitcoin to break out to new all-time highs. And in April, Bitcoin rallied to a high of right around 65,000. Then we had a pretty big correction, about a 50% correction, which is typical for crypto. And then several months later, rallied all the way back up. Didn't get much above that prior high. Got from 65,000 to 69,000, but then resistance and sellers caused it to stall, and we fell back down into that range. So because of those two stalls at the 65,000 and the 69,000 level, what we're left with is resistance, what we call horizontal price resistance, between those two levels. And we go ahead and draw a horizontal line here at the 65,000 mark, and then we'll draw one here at the 69,000 mark. So you can see this channel here between these yellow lines is going to be considered major resistance because of the fact that whenever the price rallies into that level, anybody who got stuck at the top is going to be selling into that just to try to break even. That's what we call overhead supply. And that's why it's important to buy breakouts to new highs, because when the price has broken out to a new high, there's no prior resistance, there's nobody stuck at a higher price level, and therefore it doesn't take as much volume for prices to move higher. So what we're faced with right now is we've made an initial rally attempt at the all-time highs, but people who bought at these higher levels and also profit takers who bought lower are selling into strength. This is a logical pivotal level where we often would see a potential pullback. So again, this is just a big picture. Taking a look at the weekly chart, keep in mind between 65,000 and 69,000 is the resistance level that we're focused on right now. Now, zooming into the weekly chart, looking at recent price action, we can see that the price has held above the 8-week exponential moving average the entire move up. We had one dip below the 8-week EMA in late January, and just an undercut, snap right back above it. And notice how since then, pretty much throughout the entire year, the 8-week EMA has acted as support, and the price has moved steadily higher. So that's a really good sign of a steady uptrend when you've got that 8-week, or some people prefer to use the 10-week exponential moving average, has really been a great indicator of trend. But let's go ahead now and drill down to the shorter term daily time frame and see what the charts say. So now that you have an idea of what Bitcoin looks like in the big picture, let's go ahead and drill down to the shorter term daily chart, where each bar represents one day of price action versus an entire week of price action. Zooming into the daily chart, we can still see These two horizontal yellow lines, this is the channel between 65 and 69,000 area that we showed you on a weekly chart. So even though we can't see that resistance on the daily chart, we can see by these horizontal lines where that resistance level is. And what we're looking at here in the daily chart is, again, we're looking at that 8-period exponential moving average. That's the green line, the 8-day EMA. And in the steadiest of uptrends, the strongest of uptrends, that 8-day EMA often acts as support. And you can see here that the market's been acting really well since mid-February. Bitcoin dipped below the 50-day moving average and then consolidated right at that level for a few weeks. And notice how volume then started to come in early February as prices moved higher. And this resistance level here from January, Bitcoin broke through it pretty quickly. And that was a rally to a new 52-week high as of mid-February. And then we entered into a tight sideways consolidation for less than 2 weeks, about 12 days, slight undercut below the 8-day EMA, which you often see. And that consolidation was known as a correction by time, and that prompted a breakout to another new 52-week high. And on this last move higher, notice how the consolidation, we had kind of a what we call a bull pennant pattern that formed. And this tight sideways consolidation only went about 4 days before prices again broke out to a new 52-week high. And that's led us to where we're at now, just below the all-time high. So it was a pretty swift move. It was only 1 month ago that Bitcoin was at the 50-day moving average and still below even its 52-week high. And in just a month, we're all the way back up to testing its all-time highs. And such is the world of crypto. It moves in both directions very rapidly. And that's why members of the MTG tribe really appreciate the Morpheus Crypto chat room, because we keep you updated on the latest market trends. At the start of our video, we said that we would show you potential scenarios that Bitcoin could have from here and how to handle each one. So the most obvious scenario is a potential breakout to a new all-time high. That would occur if Bitcoin breaks out above the 69,000 level. But if that happens, number one, we got to look for confirmation of volume. Whenever a price is breaking out to a new high, we always want to see volume confirm, which means volume should surge higher. And that confirms that there's momentum and people stepping in to really support the price. If a breakout to a new high occurs on tepid volume, then there's higher odds that the breakout will fail. So if we do get a test above the 69,000 level, it's crucial to keep a close eye on the volume. Does volume surge higher? Notice, for example, yesterday, you see the volume yesterday was much higher than average. This yellow line is the average volume level. And we were more than 200% greater than average daily volume in Bitcoin yesterday as the price broke out above that 5-day high to a new 52-week high. So that's exactly what you want to see, just as we had that higher volume yesterday. And again, notice here on the first day after we broke out back in mid-February, we broke out from that consolidation. Again, volume picked up. So you always want to look for higher volume on the breakout and lighter volume on the pullback or the consolidation. So in the first scenario, if we get a breakout to a new all-time high, then Bitcoin could be in play as a potential buy entry above the 69,000 level. Now, if you miss that breakout, don't chase it. I mean, it's really important not to chase because you need to keep your risk reward in line for a valid buy point. So if you miss the entry by more than, say, 0.5% or so, then it's better off to wait for a pullback. If you get a breakout, wait for the pullback and buy the first pullback to this support level. Remember that once a resistance level is broken, that resistance becomes a new support. So if we break out above 69,000 on high volume and get a lighter volume pullback to that 69,000 area, that could present a relatively low risk buy point. Now, if you're buying the breakout, it's really important to maintain a tighter stop, because with buying a breakout, if the breakout fails, those failures often come back down very sharply. So if I was going to buy a breakout above the 69,000 level, I'd want to have a stop not more than about 1 to 2% below there, depending on what your target is for your time frame, but keep it pretty tight. Now, typically, we only want to buy a breakout to a new all-time high if there's a valid base of consolidation that precedes it. In this case, there's no base. Notice how the price just ran straight up to that 69,000 mark without a base. What do I mean by the base? The base right here, for example, that occurred in mid-February, we had almost 2 weeks of a tight sideways consolidation, also known as a base. That's important because that builds support for the price when it breaks out, so that it's more likely for the breakout to stick. But when you've got a rally without a valid base, then it's more likely to stall. So ideally, before a breakout, we'd like to see Bitcoin go sideways and consolidate here for At least, the best consolidations are 2 to 5 weeks before it breaks out. And that leads us to our second scenario. And that is the first scenario is a potential breakout. Again, we could play that, maybe reduce your share size to minimize risk and keep a tight stop. You could also set an alarm, by the way, to make sure you don't miss the breakout level. Set an alarm in your trading platform, such as TradingView. You can come over here and set an alert and be notified when the price crosses above that level. But the second scenario I mentioned is we could get a sideways consolidation. A consolidation occurs when, even in the strongest of uptrends, markets don't move in straight lines. It doesn't go straight up. The markets set a higher high, then it pulls back, sets a higher low, then it rallies to set another higher high above the prior high, then pulls back, sets a higher low. And that's kind of the pattern. You get higher highs, higher lows, and that's an uptrend. And you can see higher high, higher lows. However, eventually the bulls take a rest. And when the buyers step away and take a rest and the sellers don't step in, what you're left with is sideways consolidation. Okay, because when you get a sideways consolidation, what that's telling us is that the buyers are taking a break, but the sellers are not stepping in and taking profits. So that's a really good sign. A market corrects one of two ways. You either have a correction by time, which is the consolidation that we're talking about when prices move sideways, or you can have a correction by price, which is when the price dips lower into support, such as moving averages. Now, between these two types of corrections, which is a correction by time, consolidation, or a correction by price, a pullback, between these two types of price corrections, which do you think is more bullish? Drop a comment below and let us know your thoughts. Now, if we get this scenario where we've got a sideways consolidation, how do we trade that? Well, again, as we mentioned, the best consolidations typically last at least 2 to 5 weeks. And the longer the consolidation, though, the better. So, for example, a consolidation that lasted several months would be better than a multi-week consolidation because the longer the consolidation goes, the more powerful the eventual breakout. And think of it as a spring. When you compress a spring, the more you compress that spring, the greater it's going to expand when you let go. And that's kind of what a consolidation base is. So longer consolidation periods can be boring, but the reward eventually when we get the upside move can be better. So again, we don't know how long consolidation is going to be, but keep that in mind. The longer is typically going to lead to a more powerful move. Now, the idea of a consolidation here is as the price moves sideways, that allows the moving averages to rise up and eventually meet the price as it's moving sideways. So that has the same effect as if the price pulled back and touched the moving average, except that rather than a quick pullback, it takes more time for a consolidation. But either way, you're getting the support of the moving averages touching the price. And that's what we're looking for in order to have valid entry points with a high risk reward. So at this point, it'd be too early to say exactly how long the consolidation would be. But once we get that consolidation, look for a potential breakout above the high of that consolidation. Now, the third scenario here is a pullback, a good old-fashioned pullback where the price dips down within an uptrend. Again, definition of an uptrend is real simple. Higher highs, right? One higher high, two higher high, three higher highs, and then higher lows. Higher low, and another higher low being formed. So that's a higher highs and higher lows is an uptrend. And so if we're looking at a pullback scenario, what we want to see is a pullback that does not go below the prior low. So in this case, the prior low is this consolidation right here, this very short consolidation, and then the next low is down here. So if we get a pullback, we'd like to see the price hold up above, ideally hold up above the 60,000 mark, 61 to 63,000. That would give us an undercut below the 8-day EMA. Undercuts are great because they run stops, and if you get a bullish reversal pattern after the undercut, then you could look to buy above the high of that day. Now, if you're a member of the Morpheus Crypto chat room, we'll be sure to send you a trade alert if we spot a valid entry point in Bitcoin, and we'll let you know our exact stop price. But if you're not yet a member, keep in mind that you want to see if you get an undercut, don't just buy the undercut, wait for confirmation of the reversal, like we saw that occurred here on February 7th after this week of consolidation. Notice how we had a slight dip. It's hard to see there, but we had a slight dip below the low of that range, which turned into a reversal. So that's what we're going to keep an eye on. Also, keep in mind that as we near pivotal resistance levels, volatility tends to pick up. So don't be surprised if price action in Bitcoin starts to get more volatile in the coming days, because we've got a tug of war that's taking place here between the bulls and bears. We've got bulls that are looking to buy the breakout to new highs, but then we've also got people that want to take profits and lock in gains as we test resistance to those highs, as well as traders and investors who bought at these levels that just want to get out. So it could get a little volatile as this turns into a potential tug of war. But if we get a pullback, again, undercut of the 8-day EMA looks good. Even better, even potentially lower risk entry point would be a test of this 20-day EMA, this blue line. Notice how the price of Bitcoin has not even tested this 20-day EMA since the breakout began in mid-February. So really strong uptrend. So of course, the first test of this 20-day EMA would likely be met by buying because it hasn't even happened yet. But rather than a pullback down to this level, that would cause us to break down to a lower low. We'd rather see a consolidation that allows this moving average to continue to rise higher. Again, keep an eye on the volume. Regardless of whether we get a consolidation or we get a pullback, in both cases, volume should be lighter than it is on the way up, because that tells you that it's more the buyers taking a rest as opposed to sellers stepping in with heavy volume. So keep a close eye on that volume. Remember, if you buy the breakout, if we don't get a consolidation or we don't get a pullback, you can buy that breakout, keep your position size in check, and also maintain a tight stop to protect against a failed breakout. Now, as we wrap up here, I wanted to tell you about some important news happening in the altcoin market. Now, as promised, let's get you up to speed on some key news you need to be aware of in the altcoin market. Recently, a major news update occurred with the SEC's ongoing lawsuit against Coinbase, rekindling debate over the classification of cryptocurrencies as securities. On March 2nd, a judge in the insider trading case ruled that certain altcoins involved are indeed securities. Now, this decision sent shockwaves through the altcoin market, prompting a sharp knee-jerk reaction lower and running stops before a gradual recovery began. But now the question looms, will this set a new legal precedent, potentially categorizing many more altcoins as securities? How might this reshape the trading landscape? While we focus on trading what we see, not speculating on news reactions, this development does have the potential to significantly affect the altcoin market in the near term. As such, it's crucial to stay informed and be extra cautious with potential altcoin trades. The market's response, especially if altcoins rally beyond their March 2nd levels, it could indicate the market's dismissal of the initial negative reaction. But nevertheless, it's important to be vigilant, and that's of paramount importance until clear market signals emerge. We want to make sure we get the all clear signal before we jump back into the altcoin market. And we'll know that by looking at the market's price action and volume. Again, trading what we see, not what we think. With the insider trading lawsuit against Coinbase progressing and the recent ruling that certain altcoins are securities, the broader question arises: why has SEC Chairman Gary Gensler's approach seemingly changed from pro-crypto to enforcing stringent regulations everywhere? This development prompts speculation on the future of crypto within the US and its global influence, especially when the question remains of whether or not there is even jurisdiction to regulate cryptocurrency by the SEC in the first place. Could this signal a push towards greater investor protection, or might it inadvertently drive crypto innovation away from American shores? We'd like to hear your thoughts on this pivotal matter. Drop a comment below to share your perspective. We hope you found this video to be insightful and helping you with making a trading plan for taking advantage of Bitcoin's next move, regardless of which way it goes. As we wrap up here, be sure to check out our other videos that appear here at the end to learn more about our crypto trading strategy, and head on over to morpheustrading.com to find out all about our crypto and stock swing trading services and how you can learn to become a confident trader and trade what you see, not what you think. See you in our next video.